Hey everyone, how's it going? It is 1 p.m. Pacific time. We just got the closing bell on Wednesday, October 16th, and it actually turned out to be a fairly directional day today. So let's see how everything developed. In the SPY, you can see that we started moving down a little bit of spillover from that VIX expiration and from the downward movement that we saw in the previous session. But then pretty quickly, we started to get buyers into this market, and the buyers had control for the remainder of the day. Now, if you're in the free Telegram channel, you saw me call out a few SPY 0 DTE gamma levels. One of them was 581, and that was good for a really good short right here, knowing that 581 early in the morning was resistance level. I was able to put it on a trade over here, and you can see the details of that in the Telegram channel. And that was good for this downward movement right here for about 44 or 45% gain, which is really nice. Later on at 10 a.m., I called out the 582 level, and that would have been good for this move upwards, which I did not take. I was busy doing other things, but that would have been a really good trade. So that would have been two really good trades you could have gotten out of 0 DTE gamma. And we 582, we expect 582 to stay in focus, and we closed at 582.19. So these gamma levels really are pretty helpful in guiding us on where the market might go, and we can of course take advantage of that with some nice lucrative trades. Taking this into context though, let's go zoom out, take a look at on the daily, and you can see what happened here. All we did was pull back, get very close to that EMA 8. That's something that I also called out on the Telegram channel early in the morning and said, hey, if this was a picture perfect, then what would happen is the VIX expiration would cause us to move down to that EMA 8, and then we'd bounce off of it. And so far, it's looking like what happens. It just really depends on what happens tomorrow and Friday on whether or not this is a real bounce off of that EMA 8. But so far, it is developing to exactly that scenario. At least in the initial phase, it looks like that's actually what's going to happen. So uh, that means that we are still in this bullish bias. If we look at the gamma levels, we have a 585 gamma still in focus as the largest spike right here. And that means we might hit 585 by the end of the week. We already hit that earlier this week, or very close to it, 584.9 yesterday. But that spike is still there. That gamma pocket is still there, and we could very well touch it again later this week, either tomorrow or Friday. We only have 2 days left. After that, we have a whole bunch of options expiring, and we'll have to see what the gamma picture looks like on Monday. Now, you heard me refer to my Telegram channel several times. If you're not in that and you want to get in on it, it's free. You just go to thetradingpub.com/Kane and you'll be able to get into my Telegram channel. And I post throughout the day. I post gamma levels throughout the day. Sometimes I give some trade ideas, and sometimes are very simple trades, and sometimes we take advantage of option structure to boost our edge. And there's a lot of really interesting trades in there, not every single day, but enough in there to for you to learn and for you to find out some really cool ways that we take advantage and that we get that edge. So if you want to join that, thetradingpub.com/Kane. So now that we see that we have this kind of upward bias in the S&P 500, but we are capped at the 585. So the things that I was saying a couple weeks ago, or maybe even as soon as recently as last week, about there seeming to be a limit around this 580 level, maybe 585 level, that is still holding true. We still haven't broken through that. Before we were looking at a gamma structure where that was a lot more flat and there's a lot more spikes above here. So it looked like that we could really run up into 600, but that's no longer the case. Now we have this huge gamma pocket right at that 585. That's going to act as resistance. So there's a good chance that we'll bounce off of that or just pin to it. It just depends on, again, Monday, how everything is going to play out. So we'll have a better picture on Monday. It's really hard to say because that gamma expiration is pretty big. We're going from 6.3 billion in exposure down to 2.88, assuming that no one reinvests back into SPY, which is not necessarily good. Not necessarily a good assumption. So we just need to see when they go and they reinvest all of those dollars, where it's going to be about 3.5 billion to 4 billion. If all the money stays within the SPY or stays within the markets, that money will get reinvested at different strike prices, or maybe the same ones. But we just need to see how that all plays out when it comes to Monday. Let's take a look at QQQ. QQQ had a flat day, so it was hit pretty hard yesterday, mostly by the ASML earnings and the sell-off in the semiconductors. And today is a flat day, but into that EMA8 and sideways. So really not from a pure technical perspective, not that different from the S&P 500. The major difference, of course, being that we haven't matched the all-time highs of July yet in the QQQ, and we can't be super confident in the QQQ or in significantly higher all-time highs in the S&P 500 until the QQQ can break above this previous high in July. The same is going to be true for SMH. SMH is even further from that all-time high, and SMH really has been leading tech. So without SMH to pull up QQQ, that is going to be pretty difficult. So we'll see. We do have a bunch of earnings coming up. We do have all of the tech after all of the financials. So we'll probably get a lot of the semiconductors, the major ones like NVIDIA. I think we already got TSM if I'm not mistaken, or we're about to get TSM. So we'll see. We'll see if the semiconductors can get strong again and lead and pull up the QQQ, then we could possibly see the significantly higher all-time highs in the S&P 500 in this earnings season. If we don't, then everything is probably going to stay muted, and maybe by the end of the year, maybe after elections, we could have another run up. But for now, it's probably going to stay pretty flat unless the earnings are just amazing. From our experience in the last round of earnings, it wasn't enough to give the S&P 500 the kick that it needed. The Fed cutting by 50 basis points wasn't enough to give the market the kick in the pants. We did get a little bit of a movement this past week, which is good, but we really need those catalysts to continue to not only come, and not only be strong, but actually have an effect on the market. We had strong catalysts in the last several weeks and good numbers in the last several weeks, and the market just didn't move. But now that we've kind of broken above that 580 ceiling and we've gotten some movement in the S&P 500, then yes, it could move. But again, that gamma structure is not looking like a run. And if that QQQ cannot start leading, and especially IWM cannot start leading, then so you see how the IWM is here at resistance levels. There's liquidity right here. So we need to see what happens with that liquidity. Do we reject it? Do we bounce back down off of it? Do we pin to it? Or are we able to move through it? So it's going to be a little bit difficult because we have that gamma structure that isn't ideal. We've got the IWM, which is hitting into resistance. We've got QQQ, which is still below all-time highs. SMH, which is even further from all-time highs. And all year, the semiconductors is what gave us this huge bullish run in the S&P 500. So if that's not going to do it, then we need something else to take over. But if it's something else that takes over, we don't have that same nice profile where money is going into the high risk assets, and then the medium risk assets, the interest rates assets, and the low risk assets follow in line, and that we get the most from the high risk and the least from the low risk. But if semiconductors don't lead and QQQ doesn't lead, and especially IWM, if those don't lead, then we don't have that nice structure in place. It's going to be very difficult for the S&P to make huge run-ups into the end of the year to new highs. So if we zoom out a little bit, you can see that this was aggressive. This was very aggressive movement upward. We had a bit of correction. Then it became a little bit more moderate, but still fairly aggressive. But then back here on this correction, we definitely switched from an aggressive mode to a much more moderate mode. And it looks like we're still moderate to maybe slightly aggressive. But without the semiconductors, it's going to be very difficult for the S&P 500 to remain in this mode. We might just be very slowly, very passively moving upwards into the end of the year. Or, of course, there is still, at this moment in time in the markets, we do still have quite a bit of risk to the downside. So, one thing that I'm watching very carefully is TLT. TLT was on a tear downwards. The last 2 days, it popped back up, but we had this divergence between bonds and stocks, And that divergence needs to resolve itself either with bonds moving upwards or stocks moving downwards. So far, we got a little bit of movement upwards from bonds, and the S&P 500 continue to move up. So there is a tiny bit of resolution, but not a whole bunch. We really need either TLT to really come upwards or another correction in the S&P 500, or both. It could be both. It can be in the middle, but this divergence cannot last for too long. If I look at the high yield bonds, same thing. If high yield bonds are not moving upwards, then it's going to be very difficult for stocks to move upwards, because risk appetite is an indicator of risk appetite. And risk appetite just isn't in the capital markets if we're not buying high yield bonds. So what we got here was a little bit of a bounce near that MA50. So that's kind of a good sign, and very similar to the little bounce that we had in the last 2 days in TLT. But what we really need is to see these high yield bonds still moving upwards and breaking these highs over here. If we can get all of those conditions, the gamma wall getting removed, or if we start to see more even gamma further up the line in the strikes, and we get the QQQ pulling up, making new all-time highs, SMH pulling up, making new all-time highs, IWM breaking through that resistance zone, and we get high yield bonds moving up through here, then what we can expect, we probably won't get significantly lower volatility until after the election. But at least that picture starts to line up, and then this market can really start to move upwards again, similar to what we saw in the first 7 or 8 months of the year. So if all those things line up, then yes, we can continue to run up higher. But for now, all of those things falling in place, it's not impossible, but it is a tiny bit of a stretch. So we're just going to expect this kind of very moderate or kind of passive, low, less than moderate movement upwards in the S&P 500, if not a pullback or a correction. So I think that's pretty much it. We've already talked about momentum. We've talked about a lot of things inside this market. So those are things that we really want to watch out for. And of course, I'll update you if any of these factors start to change, especially the gamma structure. But for now, we're going to say, hey, maybe 585 by the end of the week, and then options expiration happens, and then we'll have to completely reevaluate our picture on Monday. So that's it for today. I will see you guys tomorrow, and we'll see if this picture changes at all. Have a wonderful rest of your day, and I will see you tomorrow.